Hello traders and welcome to another video review. Today is Tuesday, the 13th of the October 2020, and we are going to take a look at the Forex calendar. Of course, we are going to see what are the important events for today, and then we are going to take a look as well as the various Forex pairs and see the technical analysis for them. One of them will be gold, so if you are into gold, then you possibly should stay with me for a little bit longer. So let's just start with the Forex calendar. It's Tuesday, as you can see, there are some data that has been released already. For example, we got the data from the UK. The climate count change and the climate count rate. As you can see here, the data from the count change was better than expected, because the actual reading was 28,000 people that are looking for job, and for the last period, for the September, there was of course 73,000 people looking for work. So this is better than expected for the British pound. And of course the climate count rate unfortunately jumps a little bit, and it jumps from 4.1 to 4.5, where the forecast was 4.3%. So that's a kind of a important jump in count rate. Average earnings index is not changed. Has not been changed for the last month, and last time it was minus 1%. The forecast was increase of minus 0.6, but it didn't happen. It just 0.0, so it's better than expected as well. So maybe the earnings are not rising, but are not going down as well. Another interesting data are from the Germany, which is CPI, and the CPI, as you can see here, is of course the very significant reading as the one of the primary gauges for inflation. So as you can see, all of this reading are this data are in line with the reading, and the forecast is equal the actual reading, so minus 0.2%. So there is no change in the CPI, and no change with the harmonized CPI as well from the Germany. And at 11 o'clock we are going to have ZEW economic sentiment data, as you can see, regarding the current situation and general economic sentiment from the German and from the whole euro area. So this is all of this data are scheduled for 11 o'clock. As you can see, they not expect much of the improvement, because the forecast is lower than the previous reading. Possibly it's because of the pandemic, of the COVID pandemic that is spreading widely across the world. And as you can see here at the end, the high impact data release is scheduled for 2:30, and this is of course the consumer price index, which is why I will be analyzing the price of gold. As you can see here, we got the price index and the core price index here from the United States, and as you can see, there are some expectations for the consumer price index to decrease from 0.4% to 0.2%, and the same thing is for the core reading on the monthly basis, and the same is for the core reading. Apparently, on the yearly base reading, the forecast is 1.4, while the previous reading was 1.3. So there's a slight increase in the year-on-year measure, but generally for this month, for the last month, for the September, they are expecting to for the consumer price index to ease a little bit from 0.4 to 0.2, and then at the end, at the almost end of the trading day, we got the Deputy Governor Andrew Bailey speech scheduled for 4 p.m. and he's of course from the Bank of England, so that might influence the British pound as well. So let's take a look at some interesting forex pair. We are going to start with gold, I think. Yeah, we are going to start with the gold, as I said. So what is the situation on the gold? The CPI reading is kind of a, it might be trigger for a gold movement, and anyway, and of course it might be trigger for the euro dollar movement, because there is American dollar involved in that, so that's why. And as you can see here, it's kind of an interesting situation, because we got this high here at the 7th of the this is August 2020. We got the trend line here, right? And now we got a nice breakout. We got a significant breakout above this trend line, which means that the recent high that was made somewhere at the level of $1,929 dollars. So this is important. Even this one was a little bit higher because this candle high is 1,932. So that's a little bit higher than the previous one. So we can easily mark it. There you go. This is the high, and right now we are just pulling back. We are pulling back towards possibly this support 1,905 because it's very close to this trend line. So it might be a test of the trend line, and then of course we might go higher if we break again above 1,932, which is this candle high. The next target is $1,974 for gold, and that will be the midterm target, because of course there are some more levels here on this chart. As you can see, we got another target eventually, which is somewhere around this high. This is 1,992, so it's almost $2,000. So overall, this outlook is right now more bullish than bearish, because it's even supported by the momentum, by the RSI indicator. As you can see here, we are just at the level of 51, somewhere at the level 51.07. So it's right above the 51 level, so it's just a little bit above the neutral level. But as you can see, we are coming off the highs. We are pulling back with the price of the gold to test the breakout. So if we will see another jump in the momentum, we can say that this breakout wasn't wasted, and the bulls want to move higher. Maybe the CPI data will be the trigger for the move higher. And if we are talking about the US dollar, and the most important pair for the US dollar is of course this one, which is matched with the euro. So euro dollar, as you can see here, there is yesterday's video when I have indicated that after the breakout there will be some kind of a test of this breakout. Again, the market is testing the breakout, and then if the test is successful, we might see the level of 1.1916, because we will continue this move higher. Or if the breakout is failure, we might see the level of 1.1696, because this is where the next important technical support is. So right now we are still fighting just around this black trend line here. We got the initial breakout. Okay, we closed the daily candle above this line, so it's good for bulls. But right now we are just going lower because we're testing this breakout. The lows of yesterday were made at the level of 1.1787. So if we will break it, if we will make any new intraday low, then the situation might be a little bit harder for the bulls. But still, I think this is typical pattern of a breakout, pullback, and then breakout higher, pullback. So as long as this pattern is being continued, then we still should expect higher prices on the euro. And if we are talking about the American dollar, there's one more pair I would like to share with you. This analysis is of the US dollar to Japanese yen, and as you can see here, we got this breakout above the local high at 105.82, and then we've made another higher high. This was 106.12 pips, but now we are coming off the highs. So these two red candles are very, very important, because the bears have managed to push the prices below the neutral level. So the momentum is right now has switched from the from the positive to negative momentum. We've made the new lows on the RSI at 45 points, so somewhere there. So anyway, it looks like there was a switch of the momentum from the positive to the negative. Right now we can just I think we can place some kind of a, yeah, there you go, the short-term trend line, and somewhere around here. And even if we do this, we can see that there is another candle that has closed below this local trend line. So it's not a good sign for the bulls, because we are just pushing the prices lower. I mean the bears are pushing the prices lower. The next target is 104.96, which is of course the local low of this market. Let me just change this trend line, change this horizontal line to a little bit higher, 106.11.12, something like this. This will be the local high, the last local high. So if we want this pair to go higher, if the bulls want to push it higher, they have to break above it, and then there is still level of 106 and 0.55, and there is still this longer term trend line. So the market is still trending below this trend line, so it's rather biased to the downside. And recently on the daily time frame, we got this local trend line, as you can see, breakout and violation. So right now it doesn't look that good for the bulls as it used to. So all eyes on the level of 104.96. This is the key level on the US dollar to Japanese yen. So that's the three pairs for today: the gold, euro dollar, and American dollar and Japanese yen. I hope you guys like it. We got our levels on the chart. We have the triggers, possible triggers, macroeconomic triggers that might start the move higher or lower. Please watch the levels and see how these levels are being played out by the market participants. I will return with the new fresh analysis tomorrow. So thank you very much for watching, and see you guys later. Bye bye.